Well, when you think about it, the way the world is going, economic issues, both local and international, things seem pretty calm. I'm kidding, of course. It seems like uncertainty has been the word of 2025 so far. So what do we do with our own finances? How do we make smart money moves? Maybe you're thinking of buying a new home, taking out a new mortgage, re-upping your mortgage. Maybe you're thinking about consolidating your debt, maybe trying to lower your monthly payments. It can be a little confusing and a little scary, especially in these uncertain times. But when it comes to this kind of stuff, there is one voice that I would go to first, and that voice is Angela Calla. She is an accredited mortgage professional and, of course, the host of The Mortgage Show on CKNW tomorrow and every Sunday afternoon at 3 o'clock. She has a book. It's called The Mortgage Code, and you can find her online at angelacalla.ca. She is full of great ideas on how to manage your debt, how to look to the future and get your financial house in order. And in many cases, she has solutions to reorganize your different debts and seriously lower your monthly payments while still paying off more and more of that debt sooner, so it'll be gone. And we've got Angela here right now. So hi, Angela. How are you?
Hello. Pleasure to be here with you today. Thank you for that lovely introduction, Martin.
Oh, you're very, very welcome, because we're going to talk about smart money moves, and you always bring the good advice. And I guess, like I say, uncertainty is in the air. There's an election on Monday. There's what's going on with the U.S. and tariffs. And I guess now more than ever, it's really important to make sure that you organize your finances in the right way.
It really is. And there is a way for you to organize your finances, for you to be in control, and take what you have and make it work most effectively for you. And Martin, for this show today, we've broken down 3 smart money moves that we will take you through in order to make sure that you can take a deep breath and know that no matter what happens with the election, no matter what happens with interest rates moving forward, you are taking the steps to best utilize the market with within you control.
Mm-hmm. All right. So that's good. We're breaking it down into 3 smart money moves. And I guess my first question has to be, what's the first one? What's the most important? I don't know if one is more important than the other, but let's start. What's number 1?
Yes, we'll say that they're simultaneously, but they all work together. And so that's a great way to explain it, is that although we're going to be naming them in sequence, they're not sequential. They're all in unison to help you. The first thing that you want to do is, but even before the 3 smart money moves, just think about what's important to you. Take a look at your monthly expenses and just kind of know what you're thinking. You know, in the next few years, are you going to be staying in the same home? Do you have any big expenses coming up? Is there something that, you know, you need money for that you want to think about? Because when you are looking at a mortgage move, those are all the questions that we're going to naturally take you through to make sure that we do everything to have you set up the proper way for the mortgage milestone being your mortgage renewal or your mortgage review, because each one represents an opportunity. And the first thing that we're going to do, the very first thing, is we're going to review your mortgage rate. Because if you got a mortgage in the last 2 years, it's quite possible you're paying more now than what you could be moving forward, because we have just come down off some record highs that we haven't seen interest rates in the last decade. And if you have been, like myself included, one of those individuals that had to renew a mortgage at the highest high, November 2022, you can redo your mortgage now for a lower interest rate and potentially save money. And that will all come down to the basic math. So we take a look at what you had. We take a look at what's available. We work out the math, including the prepayment penalty, and the numbers will be very simple to identify. It'll either be worth it, and there'll be a financial advantage that you'll see on a monthly basis, and the compound effect to your benefit of having the lower interest rate and paying down more principal can be immediately recognized. So if you're someone who thought, oh, my timing was terrible, I'm so upset, Don't be. Take control today. Let's look at reviewing that math and see what works in your favor.
And I guess for a lot of people, they're thinking, well, I've signed this mortgage agreement and I'm locked in. But in a lot of cases, you're not. You have options that you probably don't know you have, right?
One of the cutest things that one of my clients said to me the other day, he's a chef, and he said, well, I guess it's not a crock pot. It's not a roast that you put in your crock pot, is it? And I just laughed because he's so right. You don't get a mortgage, put it in the drawer, and that's it. When you're reviewing it every time there's an economic change, or the mortgage broker that you're aligned with is watching those items for you, we notify our clients every time there's a shift in the bond market or the Bank of Canada rate by about 50 basis points. That warrants a physical review to say, hey, are we still in the best option for this borrower to save the most amount of money? Or is there a smart money move that we can make to help them pay less interest, gain more equity, and have mortgage freedom sooner?
Mm-hmm. And I should mention that your website is angelacalla.ca if people want to go and talk to a mortgage broker, because I guess, you're on the radio so much, and I think most people know what a mortgage broker does. But I think for those few people who don't understand the idea of what a mortgage broker does, they really are kind of a miracle worker, and you don't have to pay them, which I just love.
Yes, our service is free. We're compensated from where we end up placing the mortgage, and we have access to the major banks, and we also have access to lenders with better terms that consumers can only access through a mortgage broker. And unlike a bank, we are not there to sell products for the bank. So it's not about whatever the bank's targets are. It's about whatever is going to help our client get to their financial goal, which is why we're proactive and not reactive. Every time someone calls me that's just dealt with the bank in the past, and I ask them a question, and I say, okay, when was the last time that the bank called you to, reduce your interest rate and for them to make less money? The call gets pretty quiet because they only hear from the institution when the institution is trying to cross-sell them something. They go in there, or the mortgage is up for renewal, and you may or may not have a human, or you could have an AI bot reaching out to you to try to get you just to do everything digitally without an actual consult of a professional. And the real difference is made when you're aligned with a professional whose only interest by their designation is to review your mortgage, learn about your financial goals, and then marry those two together to tell you the pros and cons of all the options that you're considering, not just the one that's available to you that you were able to access on your own.
And now more than ever, it seems like there's so many changes. We're probably looking at perhaps another interest rate change in the coming weeks and months. So it's more important than ever to always be on top of what's going on with that.
It is. And so our practice is always to be on top of those economic factors because, we're looking at the bond market for fixed rates. We're looking at the Bank of Canada for variable and adjustable rate mortgages. But we're also looking at incentives that come out. We're looking at new amortization. We're looking at new mortgage products. And then we're combining that with your personal lifestyle and bringing forward to you opportunities that you didn't know exist. We have, Robert was on my show the other day, and he was a client of ours, and he had been with his bank forever. And, what they didn't realize was that they thought that mortgage renewal was all about mortgage rate. And, they got a call. The bank said, this is the rate. And they thought, okay, that's pretty good. I'll call around and say it. And then when we went through everything, we realized they had a car loan. They had credit cards, lines of credit. And when we said, hey, we got to look at your whole financial plan here. We can redo your mortgage and save you about $1,600 a month.
Holy cow.
And he was like, oh my gosh, I had no idea. But do you know why he had no idea?
Why?
Well, not only because the banks didn't ask, but the lending institutions make the most amount of money off of those micro loans. Right? They make more off a 19% credit card or 11% credit card or a line of credit at Prime Plus, 1 or 2, even at Prime, right? Because they know that you're just going to make the interest payment And as a consumer, if we don't know there's a better way to do things, we just keep going the way we've always gone, because it's not in their best interest to have you save money and now not need the debt from them, because that's not a profit center for them, right? So now when we free up this $1,600 a month, Martin, guess what? That home that they wanted to move up to with their 2 little girls is actually attainable, because now that they're saving $1,600 a month, they're stopping the cycle of debt, and they're also able to move up the property ladder by about $300,000 in mortgage qualification. Whereas if they stayed paying the debt the ineffective way that it was being paid, they wouldn't have the ability with equity or qualifications, the way the qualification rules are, to ever move up the property ladder by that $300,000. So they're able to save the money, upgrade their home if they choose to. They may stay where they are, but they had been considering a move. But now he's like, okay, well, I can invest in RESPs for my daughters. Maybe if we don't move up the property ladder, maybe we could look at retiring earlier or buying that legacy property, because we go to the interior all the time for vacationing. And one day when the girls grow up, that could be the family place. It just kind of opens up all these exciting opportunities that if you were just shopping for a mortgage thinking it was about a mortgage rate, you could have missed.
Oh, there's so much more. And that's why Angela Calla is the person to talk to. Go to angelacalla.ca. She's an accredited mortgage professional and host of The Mortgage Show on CKNW. And we are looking at the 3 smart money moves you need to make today. In order, just heard about somebody saving $1,600 a month on their payments. And when we come back, it's steps 2 and 3. The first one is to review your mortgage rate. And coming up, it's number 2. So you want to hear this. It's when Vancouver Consumer continues with Angela Calla. And we'll be back with more right after this.
This is a paid commercial program. Unless otherwise identified, the guests on the program are employees of the advertiser. The opinions expressed are those of the advertiser and do not necessarily reflect the views and policies of CKNW.
Welcome back. It's Vancouver Consumer. I'm Martin Strong, and our guest is Angela Calla. Angela Calla, an accredited mortgage professional. And if you want to get some help from Angela, just go to angelacalla.ca. Angela is, of course, the host of The Mortgage Show on CKNW, and she's the author of a book called The Mortgage Code. And I love talking to Angela because she literally can save people money. And it's not by getting another job, it's by rearranging everything, all your debts and all that stuff. And today we're talking about the 3 smart money moves that you should make today. And the first one, which we've already been through, is to review your mortgage rate, to keep up on that. And I guess we don't have to go on much further about that, but things are changing, and you should always make sure you understand where the current interest rate is and what you're paying. Right?
Absolutely. Absolutely. And that's where part number 2 comes in. And that's your outside debt payment review. Consolidate and conquer. Right. Consolidate and conquer. Most families carry high interest debt, car loans, credit cards, lines of credit. And, rolling that into your mortgage, you can really get ahead without having to get an extra job. This really reminds me of Mary and Joe. They had 2 families under 10 years old. They had a $450,000 mortgage at, what was a good rate? 4.48%. But with that $40,000 in outside debt, which was a car loan, line of credit, and credit card, they refinanced to a lower rate in the earlier 4s, so a lower rate than what they had. This specific example from a few weeks back was at 4.19, and that changed their monthly obligations of money going out of their household from, $3,200 to $2,400. So it was about an $800 savings overall. So, that's nearly $10,000 a year, money that can help you pay down the new mortgage faster, invest in yourself, retire early. And when you put that to work, it is by far my favorite money move out of all 3.
Yeah, because those are the stories I love hearing from you, is when it's really with the stroke of a pen, people can just spend less money because it's just interest that you're paying for. You're not getting anything less. You're just paying less interest, so you're making more money.
Exactly. And you're modifying the payment schedule and you're giving yourself ultimate control. So when we look at these economic factors, we can go from being, stressed, and then we can go from just reviewing your mortgage, changing the paperwork, changing the structure of the debt, and now you're saving that money. So it's like bringing an extra income into the house without doing any work.
Right. So basically, if somebody has a mortgage and maybe a loan, and they also have a little bit of credit card debt, that's the first no-brainer thing, is to refinance that credit card debt. Just get rid of that.
Absolutely. And so we are constantly checking in with our clients to say, hey, how's everything going? Have you had any emergencies come up? Do you foresee any issues? And so our proactive mortgage management, once you have worked with us, is consistent in that. But if you're listening today for the first time, or, you're just wondering how to get through these economic changes, or you've had something come up quickly and you didn't have any time to take a review for it, invest in yourself today. Let's consolidate and conquer.
Right. And I guess people have attitudes about debt too. They're sort of ashamed of debt. I mean, personally, I've always been ashamed of, not ashamed, maybe that's not the word, but you sometimes, you kind of feel bad about debt, and you probably should have a different attitude about it. Would you say that's true?
I mean, yes, I absolutely understand that. But here's what I also understand. We are all living paycheck to paycheck in most cases. And with how inflation has risen, a dollar does not go as far as it does. And there's always something that comes up in life that is out of our control. So I always believe that it's just about knowing what options are out there, and you should not be ashamed by any means if you are someone that has outside debt, because it's not your fault. It's always being sold to you. During the break, I was telling you, I got a call from an AI robot asking me to increase my credit line. And if I needed that increase, I would get it and I wouldn't think about it. And you'd be making your payments, and until there's a better way to do it, of course you're not going to make a change. But we have the ability to, get rid of that fear by moving forward, and doing this will be the best thing you could do for yourself.
Yeah, because there's probably a lot of people, they have their mortgage, and then maybe they have credit card debt, and credit card debt is something that, they just sort of spent too much and they haven't paid it off, and they probably want to bury that in their psyche when they shouldn't. They shouldn't be ashamed of it. They should just deal with it and talk to the people at angelacalla.ca.
And I can honestly say, though, Martin, it's not overspending. It's not living this lifestyle. It's just life happens. You move into a new home, and guess what? The water tank blows. And now the water tank blew and you found something else. Or, something happened with your car and you had a super expensive repair. Or, there's just so many things that come up, or you have a health issue, or something didn't go as planned at work. I mean, the cost of everything, and having kids and childcare and sports, and there's a lot of sandwich generation children that are also helping parents, and parents that are helping kids. And sometimes they just access the money so fast, they haven't had time to put together a strategy. So I'd like to encourage you to invest in yourself. Let's take a look, and let's see what we can do to save you money. Yeah,
it's always something like your dog collides with another dog chasing a tennis ball at the dog park, and you have to take the dog to the vet to get their teeth pulled out. But that's
right. Oh my goodness.
Oh my goodness. That's a specific example from a few years ago. I should leave that one alone. So number 2 on our lists of smart money moves is to manage your debt, or how did you put it?
Consolidate and conquer. Outside debt payment review.
Exactly. So number 1 is to review your mortgage rate. Make sure you know what you're paying as compared to what's out there. Number 2 is to consolidate and conquer. Look at your debt. Now, number 3 of the smart money moves that people should get to today.
This is a big one. We do this quite frequently. It's amortization optimization. So it's stretch smarter, not harder. So oftentimes we'll see someone who might be struggling with their payments, and we look at the amortization and they might have 8 or 10 years left on that amortization. But if they need a lower payment because they don't want to go into debt or they have other obligations that have come out, stretching that amortization out as long as what's reasonable for your circumstances to a longer time doesn't confirm that you're going to have to pay the mortgage for that time, but it reduces the obligation to get you through challenges in life, things where you know your cash flow might be impacted. So oftentimes we'll combine that with Smart Money Move 1 and Smart Money Move 2, just to make sure that you're in control, because sometimes people work so hard to pay their mortgage off and then they want to maybe go buy another property or they want to do something else, but they learn that they can't qualify. And it's not because they can't qualify because they couldn't afford it with their income, but it's because of the structure that they had their mortgage set up initially is taking away from the qualifications. So that's another thing that we do just to put control back in people's pockets is we always recommend that you take a longer amortization, but we can modify the payment structure and strategy to pay it off in record time in whatever time you want. But we want to give you the ultimate control that if an emergency comes up or something out of our control, you can always revert to a lower payment without having to incur any costs anywhere.
Yeah, and I guess for younger people, time is something that they have that a lot of people don't have, and time really is currency, and you can use that.
It is, and it's really stretch smarter, not harder. You can use that time, but you have control of what happens in the meantime, because things are going to change throughout all of our lives. But having something that is not stressing you out and allows you to have some breathing room if you need to is great. And even for those who are, towards in retirement maybe, and maybe they still have a mortgage, there's solutions for you as well to utilize your equity so you can actually design the life that works best for you, where you're not making payments, your equity is making the payments. So you're using your equity without selling your home.
So those are the 3 smart money moves. Review your mortgage rate, what you're paying, and compare it to what's out there, because it's constantly changing and it may change very soon. Number 2 is to consolidate and conquer. That's dealing with your debt. Number 3 is talking about amortization and the time, a stretch to stretch smarter, not harder. That's how you call it. So if somebody listening is thinking those are great moves, great strategies, and they have debt and they're, trying to figure out what they should do, what's the process? They could go to angelacalla.ca. What's the process for taking it one step further?
Yeah, they just send us an email or give us a phone call, and then we have about a 10-minute consultation call just to learn a little bit about their goals. And then we follow up with an email outlining the documents that we need based on our conversation that we've had. And once we get those documents, we get to the number crunching and analyzing and strategy considerations. And 2 things will happen. 1, we'll confirm that you're in the best spot where you are and recommend a review at a later point in time. Or secondly, we hope that you'll be like one of these families and save up to $500 or $2,000 a month or more without selling a home or having to work any harder.
Right. And in terms of fees, it's the banks and the lending people who are paying the fees for all of this.
There's no fee for our service. If you have an existing mortgage if your mortgage is up for renewal, there'll be no cost to do this, except for the legal fees if you are getting a larger mortgage to divide and conquer. However, if you're breaking an existing mortgage, the penalty would be added into the analyzing to see if it's worth it for you or not. And of course, that's any savings that we talk about on the show are net benefit. So when we talked about the family saving $1,600 a month or $800 a month, that was after incorporating a new payment penalty. So as you can see in those cases, it's significantly advantageous.
Yeah. And do you find most people are surprised that they have more options than they thought they did?
Well, absolutely. But it's totally understandable, because you wouldn't know until you talk to somebody unbiased. Because whenever you're working with one institution, they're there to try to sell you and cross-sell you within what their offerings are. It doesn't make them bad. It's just that's what they have, and they have goals and processes that are laid out by their employer, and that's what it is, you know. So it's not bad, but when you learn that there's a way that you can review all these options without bias, and that a mortgage broker's responsibility is to be transparent with you and be honest in terms of what could be advantageous for you, then it's a big relief.
Yeah, and it's not like the robot on the phone is going to tell you.
Oh my goodness. I'm still laughing about that. Yeah, we're not looking to increase anyone's credit lines with AI robots, that's for sure.
Right. Well, Angela Calla, thanks a lot, Angela. Always a pleasure to talk to you.
Always a pleasure. The time flies by, Martin.
Oh, right on. AngelaCalla.ca is the website. Angela, of course, a host of The Mortgage Show. You can hear it tomorrow on CKNW and every Sunday afternoon at 3 o'clock. And her book is called The Mortgage Code. And this is Vancouver Consumer. I'm Martin Strong.